Hello, everyone. Oh, my hair's looking ratchet today. That's okay. Anyways, it is Nykole, and we are gonna get Ben on here in just a second to do our live. We are moving this call till Mondays at 2, just so you guys know, to make it more consistent with always. Man, I have the hiccups. A little complicated for me. So I want to make sure that we're bringing value to you and what that looks like. So we're going to change it to Mondays at 2 p.m. So be on the lookout for that. But yes, just exciting. I just got done teaching a class on 10 ways to lead generate in this business in today's market. So some really exciting. We have a Millionaire Real Estate Agent Playbook, which essentially takes different business models from different people. And I went over 10 different ones. So lots of value add to different agents and all that fun stuff. So
Awesome.
am I back?
Oh, yeah, you're back.
Oh yeah. Okay. So I'm excited. It's Ben and myself, two of your favorite people in real estate at 2 o'clock, here to give you a market update and what's going on. So I thought hand it over to you. We have about 15 minutes, so let's talk about what is going on. What are we seeing? What are clients' questions? What can we help with?
So I have a really good one this week. Rates have fluctuated a lot based on just gas and the war and so many different factors. And, Warsh is now the Fed chair and just so many different questions. The strategy currently that is being used that a lot of people, I don't know if they know, but for both sellers and buyers, this is amazing, is still the buy downs of rates and not so much the permanent buy downs, more of the temporary buy downs. And I wanted to go more in detail. We did this once before, but we didn't go into more details of the strategy behind it for a seller. So if you're selling your home, it's been on the market for a long time, the strategy behind it, and then also the buyer. So for a seller, and I'll let you comment after that too, is when a seller is at the point, it's been on the market for 30 days, you're thinking about possibly lowering the price, that can hurt not only you, but every home around you, because now your home, when it sells, is a comparable to another home. So overall, that can hurt the market. And yes, the rates are a little high, so affordability is huge right now. So the strategy behind that is, instead of lowering the price by offering a temporary buy down like a 3-2-1, a 2-1, or a 1-0, which we'll go into, that can help a client have 500, 600, maybe even $1,000 less as a mortgage payment buying your home, where every $10,000 you drop is about $60 to $70 a month in payment. That's not very much, and it hurts the rest of the real estate market. So if you're a seller out there right now and you really are struggling per se, or you're challenged to sell your home, maybe you did list it too high, maybe you tried to sell it too quick, or whatever that strategy was, and you're in a point where you're going to compare to, should I drop price? Let's maybe look at doing a temporary buy down so that we can affect the payment more and get more buyers interested in the home.
The problem with that that
Yes.
we run across, hi Lisa, is our Northwest MLS does not allow us to market
Ooh.
that in the marketing remarks, and so we're governed by their rules and their regulations. So it limits us syndicating to the Zillows and all of that, because it's through the MLS currently right now until things change. And so to be able to do that would be just through our general social media marketing, flyers, those types of things. So there is a threshold of an issue there. We can put it in the agent remarks, but not in the marketing remarks to buyers themselves. And I'm going to be honest, agents don't read agent remarks. I wish they
Oh,
did.
wow. Wow.
And so that does affect that. For us, in order to make change with our MLS, us agents need to stand up and sellers need to stand up to them. What we have found when these types of things happen is most people don't know what a buy down is. And so even when we were marketing it and just getting the fines, because that's what we would do, right? Is the general consumer doesn't know what that really means.
Yep.
They don't know how much savings that really is. And
Well, she went on mute again. Someone was calling.
I'm back. I'm back. Yep. Putting that, can you hear me?
Yeah, I can.
Okay. Putting that in a easier way for them and not in a complicated way. I don't know what you as the lender are governed by in order for that. So if there was a financing flyer or something that could be marketed along with it that showed exactly how much savings, what if we put in the marketing remarks, buy this home, you know, and lower your payment $500 with something, right? Like we could be
Mhm.
creative in ways. I guess we could use chat or whatever else to kind of figure that out, but it can't be done currently in a certain way, but it could be done in a creative way if we figured that out.
Okay.
So
So let's go into more of the details a little bit
but
on the
I will
strategy.
say,
Yeah.
yeah, I will say though, it's good to know when you're an agent and you're working with a seller and they want to do a price improvement, that if you're lowering it 10 grand and buyers are very payment focused right now,
Mhm.
and that only saves them 50 or 60 bucks, 10 grand is a lot of money for sellers to lower. So is
Mhm.
that really where things are at?
No.
I mean, maybe, maybe not. I don't know. I mean,
So,
that's the thing is like we're fighting this market more so than any other of buyer's mindset versus seller's capability and trying to connect the gaps by still being governed by rules and regulations of how we can do this. So go into detail. And I think breaking it down to as vanilla as you can
mhm.
so that people understand what this is and how it could benefit them. And then talk about it can the seller contribute to it? Can the buyer contribute to it? Or is it illegal? Like, what are the thresholds of how we can make this work?
So let's start with can a buyer use with their own funds? Um, that's a misconception. Can you hear me still?
Yep.
Okay. Sorry, someone was calling in. There are lenders. I think it's how the verbiage in underwriting is read. I'm not an underwriter, so I do not want to put it. I'm going to put a disclaimer out there that basically what I have found is we have done transactions in the past, and I think different companies see it differently, is what I'll say. You can take a guideline and read it one way, and someone says, hey, that's what we should do versus this. So, with that being said, illegal, not illegal, I can't speak on that. I'm not a lawyer. I know that it wouldn't make sense in my mind as if I had an extra $10,000 to buy down a rate. There's no reason for me to pay some fees, put that $10,000 in an escrow account, which is what a temporary buy down does, and help me subsidize the payment or kind of help pay the payment down at a 1% or 2% lower rate. It would be smarter if a client had that kind of cash to just leave it in their savings account. And then if their payment was, let's just say $3,000 a month and they wanted it to be 2,000, they could just add an extra 1,000 out of that savings account rather than paying extra for an escrow account or a temporary buy down or, because they do come with fees for an escrow account. So,
Right.
um,
Okay.
so sellers would be the one, that's the strategy would be if a seller was about to drop at $10,000, the comparison would be, yes, it may save them $70 a month as a consumer buying a home. But if they took that 10,000 and put it towards maybe a 3-2-1 buy down, which we'll go into, is where the first year the rate is 3% lower. The second year, the rate is 2% lower. And the third year, the rate is 1% lower. And then going into the fourth year through the next 30 years until the note is paid off, it's the normal rate. So let's just say rates are at 7%. Okay. Or 6, it doesn't matter. If they were at 7% and you did a 3-2-1 buy down, which the cost of that is definitely more than $10,000, it's a percentage of the loan amount, which we
Okay.
can run every time, then your note rate to start for payment would be 3% less that first year. So it would be 4%, which is pretty amazing. We haven't seen 4% rates for a while. So that payment savings would be definitely a lot bigger than just $20,000 off the actual purchase price. The
Well, and
two
I
one,
think
good.
what I think, let's just slow down on that for a
Okay.
second, is when looking at these homes, because we as agents need to get buyers off the fence, right? We
Yep.
need to take them from the thought, I was just talking to Lisa Schultz about this too, she's on the call, is taking their dreams off the shelf and helping them see the steps in order to do that, right? How
Mhm.
can we help them? So when they're looking at a $500,000 house and they're like, I don't want my payment to be this, right?
Mhm.
We can say, okay, let's run the numbers on these showings and call the seller or the listing agent and say, hey, has your client thought about paying closing costs? Have they thought about doing a rate buy down? Have they thought about these types of things? You know, would they be willing to look at that? And then can the seller then pay closing costs and the rate buy down? Is that something that written the right way they could get over the 3% allowance or
So uh, there are, when you say allowances, there are amounts that you can get per VA has a max seller contributions, FHA does, and conventional does. If I'm correct, there is a max allowable in there. So usually the 2-1 buy down on conventional is the ideal, like that's the sweet spot.
okay.
I think a 1-0 buy down is less enough where some companies are doing some credits on those. Currently, I've seen some advertisements where you could at least get that 1% down. We've done that a lot on when there is extra contributions, or if you go to the table to negotiate after your inspection and you get another 5, 6, 7 grand in seller contributions or closing costs paid for, you can use that for a 1-0 buy down, which would obviously buy it down 1% for that first year, which can really help you. So I did the math really quickly on your $500,000 scenario. And doing a 3-2-1 buy down, we're just going to start there. Going down 3% that first year is about $1,000 different in payment on principal and interest. That's pretty huge. That's way more significant for a buyer who, if that cost is, let's just say, $20,000 in seller contributions, right? And that's a little bit more than probably what it is. But let's just say the buyer could lower their costs from 500,000 to 480, or excuse me, the seller, or they could give that 20,000 in seller contributions to a buyer, and now their payment could be $1,000 less. That is way more significant for that first 12 months at least than dropping their payment maybe $120 to $150 by buying a home at 480 versus 500 if they lowered the price. So having those strategic conversations, I think, is huge. I
Well,
do.
I think the overall wealth conversation goes much deeper than this too, and
Yep.
that's where you and I come in and look at everything versus just that because if you're at a company and you're expected a yearly raise or whatever, right? That by year three, could your income increase enough to cover the difference if interest rates aren't down, right? Let's talk about, what credit cards or debt consolidation coaching conversations through us looking at your budget could we help with that, because
Yep.
most people are going to increase in their income to by year three that will work if rates aren't down, right? Because we got to
Yep.
plan for worst case scenarios, and we can't date the rate, marry the house anymore, right? You've got to look at, what is your wealth strategy? What is your budget strategy? What is your income strategy to help by year three that it makes it a win-win for everyone.
Correct. And I think that 2-1 buy down is really the sweet spot. I will be honest there. I think it's not too expensive to where it does not maybe qualify for a conventional mortgage with seller contributions. And it does give enough of a break to where if rates do go into the sevens and they stay there for a while and you're getting a 2% decrease the first year and only a 1 the second year, that means your payment is going to be in that 5% mark on that first year, which is really significant. And if you can create the strategies, the possibilities of the home value going up enough to where maybe you can do a refinance even if the rates don't come down, and maybe remove a mortgage insurance in the next 2-3 years, right? Depending on where you buy, or you get a little bit more tax break and principal reduction where you can kind of leverage that wealth building that you're doing. Or like you just said, maybe you take that extra money and we pay down the 2 auto loans you have over the next 16 to 18 months, and at that time now you freed up another $1,000 of total outgo per month, and now debt is debt no matter where you have it. It's on the mortgage again. So there's a lot of different strategies to use. I would say that right now the one group of people that are using this temporary buy down or even permanent buy down the best is builders. You see it all the time. They're giving away the max amount of seller contributions to buy these payments down. And they're doing it efficiently. We need to be better as professionals, especially in this type of market, to help our buyers understand that the normal houses out there, not just construction, right? You can do this same strategy, but it starts with the conversation with getting pre-approved, and it starts with when that listing agent goes out there to have a conversation with, hey, listen, instead of lowering the price, if we have to get there, we should talk about this strategy, because then the education is out there so that we can attract more buyers and have these better conversations.
Yeah. Yeah. And as listing agents, pick up the phone. What agents are selling in your area? What does that look like? Get back into community and figuring out a way to strategize. Facebook ads, social media ads. So it's not a complete done deal. Call your title reps, call your lenders, call your friends, call your family, like get it out and explain what that savings really is on a larger scale, because the payment shock is huge. It
Mhm.
really is, and it prevents people from taking action. And if they could know that the next 3 years there was some savings there, would be big.
Yeah.
So
So
we're going to end
shifting,
it on this, but yes, keep talking about this.
well, yeah, shifting from price cuts to seller credits
Yeah.
and strategy behind that is the way to, so if you currently have a listing right now and it's coming where, man, it's not selling, it's been out in the market for 2 weeks, 3 weeks, whatever, or maybe you did drop the price already, and have that conversation with your current realtor. Reach out to a lender, reach out to someone you trust, have that conversation to see if they can help you in that current situation so that we can help the whole real estate market better.
Yep. Yeah. And then strategize on what that's going to look like because of our rules with the MLS. But
Yes.
there still are options. It's our job and our responsibility to educate, inform, help people save time and money, and really accomplish their dreams. back into that. So, focus on, I always say this, get pre-approved and wait instead of waiting to get pre-approved.
I love that. I
Because
still
the
love that.
market time is now. Right? Let's get your finances in order. Let's look at what you need. If you need classes, I mean, we're going to do the Dave Ramsey financial piece. If that's something that people need to get plugged into, get your spouse in there. Let's talk about budget. Let's talk about the things that we can do in order to set you up for success. You don't have to do this alone. Let's get connected. Let's create a tribe and let's focus on it. Ben and I will do it along with you. We need it
Yep.
too.
100%.
So,
Love it. So
okay,
next
well,
week,
next week, Monday at 2.
yep,
We'll
and
be
we
back
will
on
be
this.
having a special guest on here. Lisa will be joining us to go over. She's an amazing title rep in the area with Chicago Title. So if you guys have any questions about title and escrow and anything at all, please send them in before the week. We'd love to kind of ask her and put her on the spot a little bit and find out more about the benefits and strategies behind title and how we can help.
Yep.
And then we have another class coming up. When is it? I think it's in June. Is it June?
We'll get
You're
it
like, I
out
don't
to
know.
you. Yeah.
We'll get it
Follow
out to you.
our the Nykole Larson Associates NLA Real Estate Facebook page.
Yep.
It has all of our events on there. If you want to get put onto our email list, you're welcome to do that as well. Where you're getting in front of that. And I'll create events for this live so people can get plugged in and get notifications too.
Perfect.
Awesome. Well, I hope you guys have a fantastic day. It is starting to get sunshiny again, and I will say do something for yourself. It is okay to be selfish. That I think we're taught that being selfish is bad, but honestly, you need to put yourself first because if you are living from an empty vessel, there's nothing to give. And our bodies, our minds, our souls, everything need to be reconnected, rejuvenated, and it's your responsibility as a human being to take care of yourself.
I love that.
So whether that's going outside and getting some fresh air or getting yourself a massage, no thank you to me, but if that's something you need to do, or calling and having a conversation with someone that you've been avoiding, or a conversation with yourself, meditation, prayer, that's my challenge for you is to get out there and take care of you.
I love that.
So, okay.
We'll see you on
I
Monday.
love you, Dave. Have a good day.
Bye.